Hello everyone, welcome to my channel. I am John and I make investment videos, and today's video I am going to cover the fact that I have started dividend investing. So after some research over a number of weeks when I've had the chance, I've built my first dividend stock portfolio. I'm excited to talk you through each stock that I've invested in, and I would like to know your thoughts below. It's not perfect, I know it's not perfect, I will make changes in the future, but these were ones that I was happy to invest in right now, and it's just a spread portfolio. So what is dividend investing? In case you don't know, dividend investing involves purchasing shares in companies that regularly distribute a portion of their earnings to shareholders in the form of dividends. Think of it like cultivating a money tree. So this is also known as the snowball effect, which I have done a video about previously, which I will link here now, and that it shows the power of compounding. So instead of relying solely on stock price appreciation, you're earning consistent income monthly, quarterly, or annually. Some pay semi-annually, that's common in a lot of British stocks, but yeah, just by holding on to these stocks you can get paid out some form of dividend and also have stock appreciation. So over time, this strategy can significantly boost your passive income, potentially paving the way for early retirement or financial independence. Many investors are drawn to dividend investing because it's less volatile, offers predictable outcome, and can be incredibly rewarding in the long run. But before we get into the video, this video is not financial advice. I'm sharing my personal investment journey and decisions. Always conduct your own research or consult with a financial advisor before making investment choices. Let's dive into my dividend portfolio. So I'm using Snowball Analytics over here. I've just got a demo portfolio, but it shows everything that I wanted to show. So I've started by investing 60 quid into these 10 stocks, which has produced me a passive income or dividend rate of 4.44% overall. And if we look at the portfolio breakdown, I've got 3 real estate stocks, I've got 2 financial stocks, I have 2 healthcare stocks, 1 IT stock, 1 energy stock, and 1 consumer staples stock. Obviously I've not bought them at the right time because the market, well, there's no such thing as not buying at the right time. I just bought it in such a turbulent market, so the prices have been all over, but I don't mind. Here is my portfolio. So I have bought Agree Realty Corporation, which is a REIT. So this is a retail focused REIT with a portfolio of 2,161 properties, totaling approximately 44.9 million square feet. The stock is currently trading around the $76 mark with a dividend yield of 3.91%. Analysts have this one at a moderate buy rating with an average 12-month price target of around $80. But I like this one. I like a retail focused REIT because them spaces are always wanted by companies. So I think this is quite a strong purchase. What I've done is I've put them in a pie on trading 212, and they all just split 10% because I'm just going to build the habit of investing in these and let them compound first before I get anywhere, because as you see I'm not investing a lot at the minute, I'm just getting my toe in the door, so I just want to build that up. The next one which I bought is Chevron Corporation. If you haven't heard of Chevron by now, then I'd be quite surprised. They're a huge company, they are a dividend aristocrat. So this is an integrated energy company which deals with oil, natural gas and geothermal energy production. They have a forward dividend yield of 4.79%, and they are committed to investing in renewable energy projects, and as this positions them well for the future landscape. So if we look at the dividend yield right now, it's 5.04%. They've had dividend growth for 38 years. Dividend growth has outgrown inflation, so that's why I'm happy with it. The payout ratio is a bit high, but I'm not worried with this one. But yeah, that's my second holding. My third holding is Gladstone Capital Corporation. So this is the first financial stock that I have bought. It is a business development company that invests in lower middle market businesses in the US. They boast a high dividend yield of 7.88%, which makes them attractive. But I think their diversified portfolio across various industries is what give me confidence that it was a good investment, because that is quite a high dividend yield. If we look at them on stock analysis, they've been growing their dividends for 3 years and they pay out monthly. This is saying the dividend yield is a little bit higher and the share and the dividend growth is quite good. But yeah, I quite like Gladstone. There's not a lot of analyst expectations for this one, but when I looked into the company personally, I was happy to invest in this company. Moving on to the other financial stock, we have Manulife Financial Corporation. So this is a Canadian insurance and financial services company. They've consistently increased their dividend for 12 years and currently offer a dividend yield of 4.07%. And their strong presence in Asia and commitment to digital transformation is what made them a good choice for a long-term investment in my eyes. So if we pull up the stats, this has a slightly different, but yet again, dividend growth is outweighing inflation. And that's also what I was looking at when I was building my portfolio, is I wanted the dividends to match or succeed inflation. Moving on to my first healthcare stock, we have Merck & Co. So this is a global pharmaceutical company known for its innovative medicines and vaccines. They have a dividend yield of 4.1% according to Snowball Analytics, and they have increased their dividends for a total of 10 years, and it is slightly outweighing inflation, but I believe they're a strong company overall. Everyone's always going to need healthcare, so they're not going anywhere anytime soon, and it's just going to be one of these strong companies that continues to thrive. The next one that I've bought, which is down significantly this week, is Novo Nordisk. So this is another healthcare stock. It's a Danish pharmaceutical company which specializes in diabetes and obesity treatments, and last year saw a 26% increase in net sales driven by its obesity drugs like Wegovy. However, they've recently dropped share price because Eli Lilly, which is one of the US competitors, has just been approved for their fat loss drug, I believe. So that might have some effects, but overall I think it's a strong investment. As you can see, the revenue growth is quite good and the earnings per share has grown year on year. The next stock that I've invested in, which is my only IT company, is Qualcomm. So this is a leading semiconductor and telecommunications equipment company known for its processors and 5G technologies. And if we look at the dividend stats, they've got a starting yield of 2.5%. Their dividend growth is beating inflation yet again, and they have grown for 10 years consistently. My next stock that I've invested in is my only consumer staples one, which is Target. If you don't know what Target is by now, I'll be surprised. So it's a leading US retailer offering a wide range of products. They have strong brand and customer loyalty and contribute to their competitive position in the retail sector. If we look at the dividend stats, it has a starting yield of 4.8%. Dividend growth is a bit slow. I would like that to be higher, but they have had growth for 54 years consistently. I am still happy to have this in there just for the balance of the portfolio. Obviously the growth isn't brilliant, but overall I still think it's a strong dividend investment. My next investment is another REIT. So this is Vici, very popular right now. So they specialize in casino and entertainment properties. I believe their whole portfolio is in Las Vegas, and Las Vegas will always be a strong place to have a portfolio. They have a strong starting yield. They beat inflation, or have been beating inflation, and they've had dividend growth of 7 years. So yeah, I think it's looking good. If interest rates do come down in America, then that's going to be even better for the REITs, as they have more cash. They'll be paying less interest on their investments. And the final stock in my dividend portfolio is Whitestone REIT. It is the least affirmed investment in my portfolio, but they have a strong starting dividend yield with good growth and they've gone on for 3 years. I'll be keeping an eye on this one, like I will with the financial ones and Target. But yeah, that is the 10 stocks. That was a quick breakdown of what they are. If we look at my analytics now, we can see my yield on cost is 4.32%, but my overall yield is already 4.4%. So if I start buying them up, and my yield on cost should lower. And then I can see my monthly payout. So obviously, as I've got invested at the minute, I'm only getting £2.40 over the year, but this will build up, and as I keep investing, this will keep increasing. So I have 3 months where I'm quite short, which is Feb, November and May, but I don't mind. It'll balance out over the year, but on average I'm getting 20 pence a month at the minute. I have received some already. I don't know why this hasn't tracked it. I don't know if it's just because I'm on the demo version. That has been it for this video. Let me know what you think of my dividend portfolio. I'm going to track it closely. There might be a few changes, but it's not going to change as much as my main portfolio, which has had a few changes in the last few months. Let me know what is your top dividend picks, because everyone's going to have something different, and maybe I'll have a look at them. Thank you for watching. Subscribe for more investing videos, and I will see you in the next one.